This is the Daily Market Comment by Rafi Poyajian. I'm Cristina Marujos. Thank you for joining us at XM.com. The euro was steadier on Friday following yesterday's volatility in response to the European Central Bank's highly anticipated monetary policy meeting. The ECB kept policy unchanged on Thursday, leading the euro to briefly surge higher before tumbling to a more than two-year low. The ECB updated its statement to signal a rate cut as well as other policy changes, indicating all options are on the table. President Mario Draghi underlined the bank's dovish tone in his press conference, but markets reacted negatively to suggestions that yesterday's decision on the revised forward guidance was not unanimous and that there was no discussion about taking any action at the meeting. However, with policymakers pretty much confirming that significant policy easing is on the way, any upside for the euro is likely to be limited and temporary. The euro's rebound helped the dollar index ease from two-month highs, though not by much. However, the greenback's newfound strength has not been limited to the euro. Declining expectations of an aggressive 50 basis points cut by the Federal Reserve next week have driven the dollar back above the 108.50 yen. Stronger than expected data out of the United States also supported the dollar, but the main focus later today will be on the advanced GDP report for the second quarter, which is expected to show U.S. economic growth slowing. The data is unlikely to affect the Fed's decision to slash rates by at least 25 basis points next week. However, any underlying weakness in consumption or prices in the report could heighten expectations of further rate cuts beyond July. The pound is once again looking at risk of breaching the $1.24 level as new UK Prime Minister Boris Johnson's Brexit plan failed to impress the European Union. The Commission President reiterated the bloc's stance that the withdrawal agreement is not up for renegotiation. However, Johnson is not likely to back down, and the prospect of a fresh standoff between London and Brussels in the coming weeks does not bode well for sterling, as a Johnson government is more likely to make good on its threat of a no-deal Brexit. This was today's Daily Market Comment at XM.com. Have a great weekend.